It's amazing when you try to speak. If you haven't spoken, all of a sudden you can't speak. Anyways, hey, good morning, everybody. It's London Lunch, Tuesday, May 24th, 2016. This is your daily Forex trading strategy session brought to you by TradersWay.com. Without further ado, let's get ready and get to work. I'll drink my my health beverage. Belch. 9,000% of my vitamin C right there. Hey, congratulations, Turkey. The economy is strong enough to keep interest rates at 7.5%. Yeah. Overnight rate, 9.5%. Wow. Huh? Hey, but let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I'm the wanderer. All right. Hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay. I do these sessions every single day, 7:30 in the morning, which is approximately London lunch. Monday through Thursday here at Forex.Today, and every Friday at FX Street, where I am Forex Speaker of the Year. Thank you for that. Hey, we hope you swing on by TradersWay.com and at least open a demo account, test out our execution, get to know our support staff, hang out with me for a few months or for a few years, and hopefully I win you over and we earn your loyalty and you fund a live account with us and start your successful Forex trading business with us as your prime broker. That's how we're going to take over the world, by doing whatever we can to make you successful. Pretty sneaky. So let's play the happy music and get to work. So swing on by Forex.Today and you can attend these sessions live. Hey, if you're watching a video though, give it a like, huh? Yeah. Boy, the happy music didn't even make me that happy today. I must be feeling sick. All right, cool. Where are we? Talk to me, Goose. Oh yeah. Couple of things I wanted to talk about. Australia. Right? We should talk about Aussie. What happened in Australia recently? FX, I covered it all yesterday. That's not Australia. Hang on. Oh my God. What's going on there? Hello, all of you. Won't you tell me your name? Baba. All right, let's go to Australia. What do I got going here? And I must be out of my mind. Nothing makes sense all of a sudden. Come on, Bubba. Oh, this goes way back to that. And then this. That's strange. All right, hang on. This goes back to beginning of May. All right, so what's going on. We know that Governor Stevens is talking down, well, actually lowering interest rates, right? Okay. Sorry, hang on. Oh my God. I thought I'd need a pick-me-up bouquet today, so I made an extra strong cup of coffee, but holy smokes, it's like coffee toothpaste. Oh, holy smokes. All right, let's try this again. All right, so interest rates are being cut in Australia, and then Governor Stevens, for the first time apparently since the cut, came out and reiterated that inflation is too low. The economy is taking longer to gain traction. When he was asked about the foreign exchange, the value of the Aussie dollar in relation to that cut, he says Aussie's doing what you would expect it to do, which is another way of saying we kind of devalued it, basically, right? So, anyways, this 4-hour chart sees an acceleration to the downside. I'm going to mark this for future reference. Hello, I love you. Won't you tell me your name? What else going on? General yen weakness at the moment, right? So with this heading down, it shows you how weak things are, right? So let's say CAD is not necessarily a beautiful currency, right? At the moment. And then drop into like a 15-minute chart. What? That's not CAD. Did I click on that? Wow, I am so slow. Holy smokes. It's twice now, just in the last 5 minutes. I click on the wrong currency pair. Amazing. All right, there we go. All right, so remember, how should we look at this? I wanted it on 15, right? Now remember, we were looking at Aussie yen. Let me double check. Yeah, CAD yen. Remember, Aussie yen was down and dead, right? Down and dead and done. Contrast that with another commodity currency, and it looks like a completely different story, right? Is the macroeconomics any different? No. Or demand for commodities any different? No, not really. So it's sort of their, micro or, their micro difference, right? So FX Ambassador wanted to know about pound dollar. Well, I said yesterday, based on what was happening on the top side, I said I either want to sell pound dollar high or I want to buy pound yen low, but it'll be one or the other. Okay. So pound dollar did go up. So if I was a bear on that, I'd start looking at resistance. And we're getting pretty close. And then yesterday at the pound yen, we were at support. So it kind of gives you the idea pound yen is straight up like a rocket. Right. So like, right. So there's still a couple on there. Okay. And let's take this down to an hour. Okay. Let me double check this setup here. I went down the street. Okay. So yesterday, one of the things that I was a bit bummed about was how like pound dollar was in its zone but not behaving the way I wanted it to based on weekly pivots, and so was pound yen. Okay, and I'm looking at kind of this area here, right? And I'm bull, and this was still coming down. I was hoping in this area, which was Monday, based on weekly pivots on the open. I was hoping it was going to be a little more aggressive and head up this way, right? Right? What's the buy zone for a bull for my weekly swing trade? So, oops. The buy zone is from here to here, right? Is that right? I think I see that right. Right. This is the M2 right here, right? Now, the interesting thing is this is in my book that I wrote, 7 years ago? It's pretty amazing, isn't it? When you think of it, that, it was a powerful, it was a powerful setup back then. It's still a powerful setup, right? So that's why yesterday I'm like, well, if dollar's going to be weak this week, then I don't mind buying the US dollar, right? Wasn't that the cusp of yesterday's seminar or webinar? Like, I'm bullish on the pound, but if the pound's going to be weak and if it's going to crash through these levels and it's going to be a down week, then so be it. But I want to buy US dollar, right? But if the pound is going to be bullish and there's still some hope, then I want to be bullish pound yen, right? And then, of course, there's the Asian session today, right? Cool. Unfortunately, it's a 786. What does that mean to me? How does that change things? Yeah, it's slowing down, right? So it tells me I need to be worried up in here. Okay. Right? Now for the weekly target though, we're hoping, hope's not a strategy, but it tells us we need to worry about, let's say, 161. But if we can get some more bulls and we get a breakout, we're probably, our target's going to be up here somewhere, right? But because the distance between this top, right, and this bottom, because that distance is so great, the expectation is a lot less, a lot lower. If we had kicked off this area off the 618, I would have felt much more comfortable with it. 618 is a reasonable entry. It's a nice roll reversal. We had the weekly central. So based on a 618, I would guess somewhere between 121.4 and 1382, which puts us there. 163. Probably M4. I'm going to try to squeeze in there. So really it takes us up to either weekly R1 or weekly M4. And I'm okay with that. That's why I was kind of bummed out we didn't get that yesterday, right? If it was a 382, okay, then I would say either here, but even more likely probably the top of the pivot profit zone. Okay. Hello. Hmm, 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 hmm. What about euro? I think we had that up for a second there. What would you expect the euro to do in this situation? Hmm, 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 hmm. Okay, and nothing. Why nothing? You're a weak yen week. Exactly. Now, very often, though, I get people that are like, man, I love trading Euro Kiwi. I'm like, is that right? And I say, well, fundamentally, I'm bearish on both, so I wouldn't even look at it. Worst case scenario, I look at it and find a good trade setup. Actually, you know what this is? I know you can't see it. Yeah, can you kind of here zoom in? Extreme close up. There's no light or anything, so it just looks like a black dot. You know what that is? It's a piece of pyrite. It's a beautiful, 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 sparkly golden stone. You know what the nickname for this stone is? It's beautiful. There we go. Fool's gold. It's sitting on my desk. Right? As long as you know it's fool's gold, right? It's funny, huh? So, anyways, yeah, the last thing I want to see is a good setup on a currency pair that should be both fundamentally weak or both fundamentally strong. I don't want to even look, because what if I find the perfect setup? What if I find the hammock we talked about yesterday, right? I'm like, oh my God, I'm going to want to trade that. And yet it's fool's gold. Okay, new higher high on the 15-minute for CAD yen. Yens are weakening really nice, guys. Eds, if you don't do it fundamentally, then I would just do a relative strength exercise. Okay. So you see this, guys? What do I say is an important piece for trading USD yen specifically? What unique component is this? Big psych levels. Thank you. So here's 107. Right? Now, if I were to adjust this, how about 109.00000000, right? Right into that zone. 4 hour, green light. That's a go. Okay. Now the question is, are you going to treat it as a psych touch? Because this is actually the psych level. It's pretty close. Are you going to treat it like a weekly M2? So you can't buy it here. Why not? Because this is where a bear is going to sell it. I'm going to put this whole area here. If I was a bear, I'd sell the hell out of it right there, man. Okay. Am I a bear? No. Can it fall? Oh, absolutely it could fall. Has nothing to do with my opinion. Okay? But one thing's for sure, if you're a bear, that's where you'd sell it. Okay? And then this area up here is going to be seriously interesting too, right? Because it's not going to be very bearish if we're above weekly M3. So anyways, that's where the bears are. But you know, if you were a bull, there's some shots in this, right, somewhere. So we just don't know if it has any legs. Now, based on this, is it plausible there's some bears in the market? But here's the last time we had a setup like that. And then here's the time before we had a setup like that. And the time before. So what happened in here? Did it rise or did it fall? Did it rise or did it fall? Did it rise or did it fall? What might happen here? Now you might see similar setups here on lots of currency pairs and they're not falling. Yeah, that can happen. And how is it that it worked here? It worked here. It worked here. But it won't work here. Or not just this currency pair, other currency pairs. How about USD CAD, for example? What's the difference? Thank you. The fundamentals have changed, yes. Okay. The Fed, in all its might, said 4 hikes. Then they said 2 hikes, right? And then they said 1 hike, right? And now they're like, no, 2 hikes. And so the dollar this year went the USD went up, and then it went down, and now it's going up. Yeah, a little confusing, huh? Well, here's the problem. The problem is they want to raise rates because it helps part of the economy. Posh Tory scum. All right. Yeah. All right. So they want to raise interest rates because it'll help part of the sector, but it's going to hurt others. Because it turns out the Fed just realized that we have international trading partners. So if you raise interest rates, the dollar gets strong. And if the dollar gets strong, it hurts exports. Right? So you have what? Government spending plus consumer spending or consumption, right? Plus business spending, which is called investment, minus exports, or exports minus imports. What is it? Plus, what is this? Primary and plus secondary, isn't that right? Secondary. Let me see if I, man, my brain is slow today. So, what are we talking about here? All right, so this is what? Consumption or absorption. And then, oh, I have to put a plus here, right? Do I have this right? Plus, boy, what do you call this? Current account. Anyone hear of current account? Or you know what? Let's change this. I think you can describe it as balance of payments. Boy, my brain is just shot today, man. I can't even do basic. So what is this? GD. What form of GDP is this? GDP. No, this is gross national disposable gross gross national disposable income. I don't know. My brain is shot. Anyways, so we're talking about this area here. If you make the dollar more expensive, we're going to export less. So this goes down, right? This goes down. We're going to import more. And the primary, this is if you work, let's say you have an overseas job, that's going to count as income. And probably this would be the same. This would probably fall. So this is flat. This flat and down. I don't know. Whatever. I don't know. I'm too sick to figure it out. Something in there somewhere. Yeah. Well, we'll have to cover that some other day, huh? Gross national disposable income. Is that right? Anyways. I think it was, how could I'm still trying to, no, you guys got me interested. So what is that? So that's going to be the current account plus the balance of payments, right? And then what did we have here on this side was consumption. Consumption minus the current account plus the balance of payments? I don't know. I guess a live webinar is the wrong time to figure this out. Yeah. But at least I'm sweating. Thank you for that. Oh. All right, so maybe I am sick. All right, so what the hell were we talking about? I don't remember anymore. What were we talking about? Bueller? Bueller? Oh yeah, USD yen. Uh, how about let's mix this up a bit. S&P 500. Am I a bull or a bear on the S&P 500? Remember, someone was talking about it crashing yesterday, right? And what did I say? I said crash is a bit of a harsh language. Probably not gonna crash. Probably still just the same. Now, I did say, you're not gonna have 25% returns every year anymore. I did say the correlation's likely to break down. I did say that money is probably going to pour back into hedge funds. But what do you hear on TV now when you listen to the talking heads on TV? Are they telling you that money is flowing out of hedge funds and they're going into passively managed indexed funds, low fee passively managed index funds? And you're like, yeah, that's exactly the dumbest thing you could possibly do. But of course, that is probably what's happening, right? Isn't that funny? So now that we're at like an all-time high in the stock market, now you want to go passive? Okay. So now that the correlation's going to break down and we're not going to be, the rising tide is not how you're going to be making money anymore. The future for wealthy people is going to be how do you beat the index, not, get into the index and pay the smallest fees possible. Now, if you want to beat the S&P 500, you're going to have to pay, you know, a market magician or like me, a prophet, and say, well, I'll beat the index for you, but you're going to have to give me 30% of the profits. But you'll keep everything else and still be better off. That's right. So here we are, and it doesn't look like it's crashing. It does look like it's at resistance. And you notice the weekly pivots? What do they tell you? Oh, you've started the banking part, Zelda? Yeah, I find that fascinating. One thing I talk about too, I'm like, you hear how the Fed has printing presses and they print money. Like, the Fed doesn't have any printing presses. The Treasury has printing presses. Oh, good, Zelda. That's cool. Yeah, okay. What do these pivots tell you guys? Tough question, isn't it? Well, no one's using the weeklies. It's one thing I would assume. And this seems to be R1, S1, R1, S1. This is S1. Seems like the stock market uses the S and Rs a lot more, don't they, versus the Ms? Hello, I love you. Won't you tell me your name? Bum, 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 da, 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 da. Rolling down the street. Da, 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 da. Hello, hello. And how about dailies? Suppose after a while, what happens is you get confirmation bias, right? Confirmation bias, M3 to M1, M3 to M1. You know what those are? 4-hour pivot points. Every 4 hours you get new pivots. How about every hour you get new pivots? High, low, and close every hour. Nah. So I want to delete this completely. What if we just took a longer view? Would it be important for you to know? Come on, drawing tool. That the top of the market was exactly R1 and the bottom of the market currently is exactly S1? Which time frame do you want to use? Hourly, 4-hour, daily, weekly, or monthly pivots when trading the S&P 500? Well, actually, let me even change that question, even though you're typing. I apologize for that. What pivots do professional S&P 500 traders seem to be using? By the way, this is the monthly central, which is probably what, close to the average price if you average the whole thing out. But remember, that line is based on the high, low, and close of April divided by 3. So Ed says weekly, but I thought we started with weekly and it looked like they were completely irrelevant. Eric says they don't at all. You're saying specifically with the S&P 500? You know, I'm just going to have to. Well, let's go back to the story of where pivot points came from. Me, 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 me. Me, me. All right. There was a time and a place when there was an exchange, and it's at the Chicago Board of Trade, where the S&P 500 was traded in an open outcry system. And if you were a client of Goldman Sachs, you'd call Goldman Sachs and say, I want you to hedge my S&P, my stock portfolio. And then they would call their floor guys, and then the floor guys would trade the S&P 500 futures, right? So anyways, all these orders are coming in from clients and brokers and so on and so forth, and this was all done in an open outcry system where they'd say, yeah, I'll buy 5, right? I'll buy 5. Right? Is it this? This is what buy, and that's the offer, whatever. I'm not a floor trader. So anyways, so they'd go out and in the chaos of the day, they would either buy or offer, right? All right. Have you guys ever seen the movie Trading Places with Dan Aykroyd and Eddie Murphy? And they trade against the Dukes. For most people, that's how they've been introduced to the to floor trading, right? Yeah, but you gotta watch it. Oh yeah, Ryan, you gotta watch it. It is the first time I ever heard of like pork bellies and stuff like that, right? So, anyways, there's a scene at the end where you see the Chicago. No. That was Philadelphia, right? What were they trading? Frozen concentrated orange juice. So, anyways, you see an exchange pit, and those were real traders, by the way. And, anyways, these exchanges were utter madness, the bedlam. They were total, absolute chaos of a frenzy, buying and selling, and you have these like traders squeezed so much that you're shoulder to shoulder and still being squeezed. Like your heads are banging, the guy's yelling behind you and he's yelling in your ear and he's spitting while he's doing it, and it's just crazy. It's madness, and you don't even have enough room to write down the orders, right, on your order card. Okay. maybe we'll YouTube it and see what's up there. Okay. Anyways, yeah, if someone could find a YouTube video of the actual floor scene at the end and pass it on, that'd be really cool. So anyways, so it was crazy madness. And let's just say, since you're not staring at charts, but you're actually standing in a pit with a couple of hundred other people, and they're all freaking out. It's 100% emotion, and quite literally 0% intellect, right? So how do you stay calm and stay focused and buy at a good price and sell at a good price? Remember, you're not even staring at a chart. Thank you. Is this the actual floor scene? Okay. So let's just see if this is it. A lot of pressure here. Oh. Oh, it's over. That's the end of it, man. Yeah, you got the all climax, dude. You're all climax, no floor, no foreplay. Yeah. All right. I can't grab these links, dude. All right, here we go.
$102 bid for 108 sold. That's seven. That's 200.
Hey, the Dukes are trying to corner the market.
By the way, this is how dumb money trades. They react to other people trading. Bunch of idiots.
200. Move. Not yet. Almost. 220. Take them. 209. Yeah, got him. 140.
See, there's 3 months.
Sell down in April at 142.
So he's selling at 142, way above the market.
That's not right. How can the price be going down?
Something's wrong. Where's Wilson?
What are they doing here?
They're selling, Mortimer.
Well, that's ridiculous. Unless that crop report...
God help us.
You may notice the back months are lower than the high one, or the front month.
You asshole!
I gotta get Wilson. And tell him to
See how tight it is on the floor? All right, so you're in a situation like this, and you're trying to make logical, intelligent decisions on where to buy for your clients and where to sell for your clients. Okay? So how do you logically, intelligently buy and sell at the right prices? Okay? What you would do in the morning when it was quiet, you notice how it all started at 9 a.m., right? Right when the market opened. So let's say it's 8:30, maybe even 8 o'clock in the morning. You get to work, you're having a cup of coffee, and you check in with the office, and they're like, yeah, we got 20 orders coming in from clients. Some clients want to sell, some want to buy. Okay, fine, great. And then you sit down and you look at what happened yesterday. I don't want to spell out yesterday. Okay, whatever. And you look at yesterday's high. That's the highest price yesterday. Well, that might be an interesting place to sell, right? If for your clients that want to sell. And then you look at yesterday's low, and that might be a good place maybe to buy for your clients that want to buy. And then you look at the close. What does the close tell you? Why would you care about the close? Well, first of all, if all you did was high and low divided by 2, what does that get you? That gives you the average. Well, we don't want an average. We don't want the average price. What a dumb place to buy or sell, right? The average price? It's got to be the worst place, right? So what you want to do is you want to look at high, low, and close, right? High plus low plus close, and you divide that by 3. That gives you a weighted average that also shows you sentiment. Did the market end yesterday bullish, or did it end bearish? Because it might influence what happens today. So you imagine if the market was up all day and then that crop report comes out and boom, the market crashes. Well, is today going to be bullish if yesterday ended bearish? Maybe there's still people that are trying to get out, right? So maybe today is going to be influenced by yesterday's close that was massively bearish. So you want to kind of put that in there because that might lower today's high might be lower than the previous day's high. And therefore, maybe that area is a good place to sell. Okay? So in this case, I might say, well, if it comes up somewhere between the central pivot point and M3, this might be my sell zone. Because the period that I measured is more bearish, right? This current period will probably be similar to the last period, which was bearish, let's say. Okay, so you could see, we did come down, we did go up, and then we did go down, right? And so they would write this in the back of their order card. And they would say, all right, if price comes up to, this area, I want to sell it. So where are those prices? 2070 to 2088. I'm going to sell for all my clients. Okay, now if I'm a bull, I might want to look at a different area. Okay, and like for example, I like M2 if I'm a bull. Okay, look at that. How many times did this act supportively? A lot. So what's happening is people wrote on the back of their card, if price comes down to 2049 and a half, I don't know, 2050, right? But 2049, I'm going to start putting in my buy orders. Remember, it's not even your decision to buy or sell. You're not a trader per se, right? It's your customers that have asked you to buy. So you're like, okay, well, if we get into here, I'm going to start putting in my buy orders. And if we get into this area, I want to put in my sell orders. And you just have it on the back of your paper. Okay, so if you're using daily pivots, for example, that you would measure yesterday's high, low, and close. Now I'm using monthly here. Okay. And this area here is the perfect place to sell. Okay. And here is the perfect place to buy. Okay. If you're using the M pivots. If you're not using M pivots, even simple, well, the M pivots are actually a little more complicated to calculate. So in the simple days, when you had to do your own calculations, what you probably used were just monthly resistance, monthly support. Okay, and that's all there was. So, on the back of your card, you'd say, okay, I want to sell up here. I mean, it's resistance 1. This is my sell zone. And then this is support 1. Pivot, support 1. So you're like, I want to buy here, and I want to sell up there, and that's that. That's all it is. Is this going to let me weekly, monthly, huh? No, it's not going to let me. So let's get rid of those. Yeah, I didn't think it was going to work. Oh, that's what happens. Sorry, holy smokes. So these are the monthlies. Weeklies on the S&P 500, at least this week, they don't seem very important. But maybe on the daily, they're important, right? And what you should want to do is, if you trade the S&P 500 or use it as a leading indicator, you should find out, through observation. You don't have to take my word for it. Find out which pivots are are your favorite, and which ones seem to work best? Because it comes down to your confidence, right? But I forget who asked, if they weren't sure if pivots were used by professionals, and they were designed by professional floor traders. That's who used them. That was my long. Wow, can't even talk. That was my long-winded answer. I'm sorry, I'm slow as molasses on a cool Georgia morning. But long story short here, that yes, professionals do use them because they were actually designed by the floor traders. Okay, so daily support 1. Okay, the breakout that just happened when daily R1 was broken. Wait, no, this is support 1. This is resistance 1. That's support 1. This is resistance 1. This must be support 1. Resistance 1. Support 1. Resistance 1. Support 1. Support 1. All right. Wow. Okay, so I look at this and say, there's moderate something going on. Okay. It seems to me that some of the traders are using the M pivots now on the day traders. So think of these as the pit traders, right? But on the strategy side, doesn't it seem like the monthlies are supremely important? Right? Look at this. Monthly. That's all we're looking at here. Amazing, huh? So kind of combine them and find out what works well, and judge it through your own observation, and develop your own confidence with something that you believe works. Not because I told you it works, but because it seems to you it does work, and that's much better. Sorry, the explanation sucked so bad.
Ladies and gentlemen, Secretary of Agriculture.
Ladies and gentlemen, the orange crop estimates for the next year.
That's why they use hand signals, Ryan. Non-farm payrolls. This is the non-farm payrolls of frozen concentrated orange juice.
After calculating the estimates from various orange-producing states, we have concluded the following. The cold winter has apparently not affected the orange harvest.
Remember, they sold at 142. It's now 96. So remember, they're selling, and there's going to be lots of orange juice available because of the crop. The crop is likely to be bountiful. Supply is high. Price comes down. Everyone's trying to get out now. All the idiots that bought high. 35. $100 per contract so far.
Where you going? Idiots! Get back in there at once and sell! But I
29. Limit down, probably, huh?
100? 100?
So you get that?
Louis, that was 100 lots. 100?
That guy's like, I got 5 contracts with you, man. I got 5. 5 contracts. Get the hell out of here.
Happy New Year!
Winthrop. Valentine.
Hey, how'd you make out today?
How could you do this to us after everything we've...
The Duke brothers' seats on the exchange up for sale at...
Oh, yeah, let's listen to this. This is what happens when you cheat.
Margin call, gentlemen. Oh, you can't expect us to...
You know the rules of the exchange, Mr. Duke. All accounts to be settled at the end of the day's trading, without exception.
You know perfectly well we don't have $394 million in cash.
I'm sorry, boys. Put the Duke brothers' seats on the exchange up for sale at once. Seize all assets of Duke and Duke Commodities Brokers, as well as all personal holdings of Randolph and Mortimer Duke.
My God. We're ruined.
That's why you never load the boat like
I
that,
demand an
guys.
investigation. You can't sell our seats. A Duke has been sitting on this exchange since it was founded. We founded this exchange. It's ours. It belongs to us.
My God.
Mortimer, your brother's not well. We better call an ambulance.
Fuck him. Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on.
Yeah, boys. That's why you don't trade that way. Nor do you trade like those idiots, huh? Hey, Duke, the Dukes know something that we don't. Let's get in there. They're buying. Let's buy too. I mean, how many people lost money on that? Well, that's how the world works, I suppose. Stupid is as stupid does. Garbage in, garbage out. The thing is, do you want to define your trading that way? Garbage in, garbage out? What do? Oh, I'm a garbage man. Garbage in, right? Piss poor trade plans, garbage out. Or do you want to do the work, right? Do the work, fall in love with doing the work, and I think you'll be fine. And I always reference one of the market wizards when Jack Schwager asked him if he could be interviewed. Like, hey, man, can I interview you for a book I'm doing? The guy says, well, okay, I'll do it, but while you interviewing me, I will be doing my homework. And he says, so he gets in there, and sure enough, he's working on his spreadsheets while being interviewed for a book. You're like, and he said, well, so why? And the market wizard said, as long as I do my homework every single day, I'm successful. And that's what made him a success, focusing on the work. So you should love that and make it a dedication. I was listening to an interview on Bloomberg Radio recently. They had a technical analyst on, and they were talking about charts and research and stuff. And the guy, just matter of fact, said, he says, like, it's the weekend, right? And he said over the weekend, that he looked at over 1,000 charts, as he does every weekend, and created the plan for the Monday morning meeting, right? It was just like a matter of fact. Like, that's what he does on the weekend. Reviews at least 1,000 charts, and they narrow it down to 50 or 60 that they want to talk about on their Monday morning meeting. And from that, they start doing their research. Isn't that interesting? They're not all stock traders. In fact, quite a few of them are commodities traders, and they're and what's his name also got into. He did quite a bit of Forex, but then he got out of Forex because he said after a while he was like 20% of the market, which I'm not entirely sure would be accurate, but maybe he was. And he said he was completely manipulated by the central banks. But the interesting thing about a lot of those market wizard guys, in the original ones, they were trend traders, which means If the market actually was going up, they did very well. And if it came down, they were foolish. A lot of these guys would have 90% retracements, and they'd still be in the market. That's just dumb. So there are plenty of dumb wizards out there. But the books are fantastic, especially if you think about it and analyze it from your point of view, saying, okay, this guy did really well with this particular strategy in 1980. How could I do that, in 2000, 16, 2017, 2018, 2019, 2020, in a similar fashion without being stupid and foolhardy with basically, these trend traders had no risk management skills, right? No stop losses, no nothing. I mean, just foolhardy, right? So how could you mix the best of both worlds of, smarter trading, technical analysis, risk management? And what it comes down to is, you should ask yourself, how do you let your winners run? How do you stay in longer? And maybe it is, daily charts with monthly pivots instead of 15-minute charts with daily pivots. Maybe that's one. Right? Sell it. Look at sell at resistance, buy at support. All right, and move your stop. Let the winners run. So, anyways, I apologize again. My voice is shot, and I'm out of energy, and I'm sitting here at 8:30 in the morning. And I'm sweating. That can't be a good sign, huh? But anyways, I hope it was. I hope we still got some value out of it. But I'll see you tomorrow, and we'll review and maybe catch some more setups. But it's just important to me that you know that I don't quit on you no matter what. Cheers. See you tomorrow.